Are you tired of struggling with Forex trading, constantly watching your profits slip away through your fingers? What if I told you that there's a scalping strategy that can skyrocket your win rate to a jaw-dropping 98%? Get ready to crush the market and leave your competitors in the dust. Stick around because in today's video, we're revealing the ultimate scalping strategy that will transform you into a master Forex trader. And the best part is, it's easier than you think. So don't miss out. Hit that subscribe button. Let's get your notepad and let's dive in. As always, nothing in this video is financial advice. It's all for informational purposes only. Under the indicators tab on TradingView, we're going to search for the following indicator, which is the Bernoulli Process Binary Entropy Function Indicator by KOCURE, KC. The featured indicator is based on the Bernoulli process or binary entropy function. The binary entropy function is a mathematical concept used to measure the uncertainty or randomness of a binary meaning two possible outcomes in a system. It takes into account the probability of each possible outcome and calculates the amount of information required to describe the system. The function is often used in information theory and data compression to analyze and optimize the representation of data. Within the Bernoulli process indicator, entropy is the measure of the available information. Here, it uses the binary variable 0 or 1, P and 1 minus P, and combines it with the Shannon entropy measurement. As you'll see from the chart, the indicator produces some wonderful signals using price, volume, or both summed together. Next, we're going to make a couple of adjustments. However, before moving forward, if you haven't already, make sure you smash that like button on this video and also subscribe and turn on the bell so you never miss out on any of my future videos. Under the Style tab for the Bernoulli Process Indicator, we are going to make the following changes. Unselect all of the different options except for price and volume. What you'll notice is that it cleans up our charts, and now we can use the indicator as a clear buy and sell signal. The way that we'll be using the Bernoulli process indicator is as follows. When it comes to a buy trade, you will need to wait for the price line, which is blue, to cross the yellow line from the bottom to the top. The opposite is true for a sell trade. You will need to wait for the blue line to cross the yellow line from the top to bottom. As you would have seen before in your own trading, relying solely on one indicator can create problems because of the fact that you could potentially have a lot of false signals, right? To reduce the amount of false signals, we are going to add another indicator to our chart. Under the Indicators tab for trading, search for VDUB and add this to your chart. Under the Style tab for this indicator, we are also going to make a couple of changes. The way that we'll be using the indicator is as our baseline. To do this under the Style options, only leave the first 5 plot options and unselect all of the following ones. This will again clean up our charts, making it easier to use. Lastly, we are going to add our third indicator. Under the Indicators tab, we are going to search for the following VDUBUS Binary Pro Indicator, also by VDUBUS. Under the Style tab for our last indicator for our strategy, we are going to unselect all of the options except for moving average and change the color to yellow to make it stand out. The way that we'll be combining these two indicators is to align ourselves with the overall trend in the market. You would have probably heard the trend is your friend. To align ourselves with the trend, when the red moving average is above the yellow moving average, we are only looking for buy or long trades. And the opposite is true for when the red line is below the yellow line, because that indicates that we are in a downward trend and should only be looking for sell trades. Now that we have all the different components of our strategy, let's take a closer look at the exact rules for a buy trade. Firstly, we'll use the Bernoulli indicator to give us a buy signal, meaning the blue line needs to cross the yellow line in an upward direction. Next, we need to wait for the price to cross the 2 baselines that we have added to our chart. After the price has crossed the moving average lines, we are waiting for a pullback to the central band so that we can enter the trend and align ourselves with the upcoming move. Let's enter the buy trade with a stop loss below the recent swing low and aim for 1 to 2 risk to reward, meaning for every 1% of the account that we risk, we should aim for a 2% return. Next, we're going to take a look at another example. However, before moving forward, if you haven't already, make sure you smash that like button on this video and also subscribe and turn on that bell. For the next trading example, we are going to be on a different time frame. As always, it's best to test the indicator against the instrument and time frame that you like to trade. Firstly, we'll wait for the Benelli indicator to give us a buy signal. Next, we need to wait for the price to cross both the central bands and close above. After the retest, you could have entered with a strong bullish candle showing you that there is momentum for your trade. Enter the buy trade with a stop loss below the recent swing low and aim for a 1 to 2 risk to reward. As you'll see, the trade played out in our favor. Next, we are going to cover the exact rules for a sell or short trade. Similarly, when it comes to a sell trade, we'll incorporate the Benelli indicator as our main entry indicator. We'll look for the yellow lines of the indicator to cross the blue line from bottom top. Next, we'll process the other two indicators and check if the market price is below the red and the yellow lines. For a short trade, the red line should be below the yellow line. Once all of these confluences are in place, we'll execute our sell trade when the market price retests and closes below the red line. As the market moves in our favor, we'll gradually move our stop loss down with the yellow line. To secure profits along the trend, we can either take a 1-to-1 or 1-to-2 risk to reward ratio. Alternatively, we can wait until the lines of the Benelli indicator cross each other or when the market price crosses the yellow line. If any one of these two conditions hit the market, it's time to book our profit and close the trade. Overall, the strategy has been proven to be very, very profitable, and it's definitely worth considering for your trading. Just remember to stick to the rules and not risk more than 2% of your account per trade, all right? Again, not financial advice, just for information purposes, but just be careful. So feel free to test it out for yourself with the stuff that you guys like to trade, like crypto, Forex, stocks, or whatever it is, right? Like all the other indicators, make sure you do back test it so you get a better understanding of how the strategy works. The strategy and trading view indicators for this strategy used in this video are completely free to use, but if you're looking for an amazing premium indicator, I personally use Lux Algo Premium for my trading, and I highly recommend it to anyone that wants more success in the markets. It's trusted by over 50,000 traders. I've got a link to it in the description below, so make sure you check it out. And if you want to see the trades that I'm actually making, like this one that I recently posted that got a 63% return, check out my free Telegram channel and join my all-access Patreon. Links to those are in the description below as well. And if you want to become a more profitable trader, be sure to check out this next video. I'll see you guys on the next one.